Welcome back to Trading 360. I'm Nicole Petalides. We're live at the New York Stock Exchange. So glad that you're with us on this Tuesday. Time for the big three stocks, three charts, three trades. And Rick Ducat will take us through the charts. Here to take us through the trades, Jessica Inskip is here, Director of Investor Research at stockbrokers.com. Thank you both for being here. Jessica, what's your big picture here? You're seeing the stock market higher, first day in the Trump administration. How are you feeling? I mean, for example, Andrew Brenner was just saying he thought the first 6 months of the economy could get weaker, but then stronger. How do you think we're seeing stocks at this point?
Yeah, I really think we need to see an earnings follow through, which is certainly what we're seeing. We had that very, very strong post-election rally. Now the earnings season is coming in and I want to see some fundamental backing, but I do think it actually could be stronger because we have a lot of actually tailwinds for us. We've got the regulatory overhang that could spur M&A activity. We could even see the IPO pipeline expand. The headwind is certainly tariffs because that could lead to inflationary pressures. However, the inflation numbers that we've gotten thus far is showing inflation well anchored to 2%. So as long as the Fed stays on that easing cycle, that would offer a cushion that any potential tariffs certainly will. And we have to remember tariffs have been utilized as a bartering mechanism. So there is certainly some uncertainty from that fiscal policy perspective. But I'm still optimistic. I think there is consumption that is driven from post-election, and that's from businesses as well as individuals, consumers as well.
All right. First up, we're talking about a Mag 7 name, and that is Amazon. And this morning, several of the houses came out with some buy readings and raised the price targets. I will note, folks, Deutsche Bank put a 275 target buy rating, a 260 target from Raymond James, strong buy rating. Roth MKM has a 260 target and a buy. They are feeling confident, and that's sort of what I've been hearing about this name with many of the guests. How do you feel, Jessica?
Yeah, I really do like Amazon, and there's for three primary reasons. First and foremost, of course, is AI. They have AI-driven cloud growth. As AI agents are being developed, that's extremely important. The other is the impending TikTok ban. A ban may not be imminent, but platform diversification certainly is. And one of the next innovations that I think we'll see with really the e-commerce space is the use of short-form video. That's the next innovation that could lead to retail margin expansion with e-commerce sales from the Amazon front. And then the third, and maybe overlooked, is the AWS operational cost. I think that would be lowered actually with a stronger US dollar. A US dollar is, we see that that's strengthening. I heard your previous guests even say that as well. And since many of AWS's operational costs tend to be outside of the US, therefore that stronger dollar would actually just naturally help lower those operational costs. So a lot working for Amazon in terms of margin expansion.
And look, it's not too far off its highs. I mean, the recent high was 233. Right now, today, it's trading at 229. Let's see what Rick Ducat has to say about the chart, please, Rick.
Yeah, it's been a strong move to the upside here ever since we hit those 52-week lows all the way back down here near 150, 161. From there, we were able to form an upward sloping channel type shape here between our two blue dashed lines, one going across these low points here. And if we just duplicated it and put it across the highs, it matched up pretty well. And we did have a bit of a upside push there. We topped out at 233, gave back a little bit of those gains. Now we're closing in on that same level here once again after we have pushed above the old previous relative highs near 229. We topped out twice around that same area, and prices pushing above that level now today. We can also see our moving averages are all trending upward, prices above all three of them. Nothing really to report there, but we did break through this very shorter term downward sloping white trend line. You could see that we had this big blue channel, but then the smaller white channel that fit within it here has been breached now as RSI, our measure of momentum, has pushed above the 50 midline and as well as its own trend line there. So a more of a bullish setup here today as we start this shortened trading week. Now, if we were to look at volume profile and standard deviation channels, we can see the area in which we were recently trading was our standout volume node. We can also see that now we are crossing above the +1 standard deviation channel. If we were to keep moving above those old highs, the +2 channel comes in near 246 or so. Maybe you would even see potential resistance at that old channel boundary as well. To the downside, this high point And then the subsequent high point that happened a few weeks later before we had our gap up, that lines up fairly closely with our lower level of our channel and our 63-day EMA and our linear regression line. So around maybe 212 to 214 or so could be an area worth watching to the downside, Nicole.
Right. Look, yeah, you have a big lineup of reasons why you think this could move to the upside. You also mentioned the retail margins, that those could be improving. Final thought on Amazon, Jessica.
And absolutely, lots of reasons outside of AI, and that diversification, along with the technicals, makes it a solid buy, in my opinion.
All right, next up, Citi, turnaround with the earnings follow through. Tell us about this story.
Yeah, so the next two stocks actually came up from one of my fundamental screens, and I did use this on Charles Schwab's website as well. But I screened for a forward-year PE ratio that was under 20 and earnings per share growth that was greater than 15%. And Citigroup and Seagate came on there. So that's where it started with the investment thesis. Now, looking at Citigroup specifically, I do think financials as a sector are positioned to benefit from a looser regulatory environment. Like you stated, they had a really good earnings beat, but what I'm paying more attention to this earnings season and going forward, and equally as important, is forward-looking guidance, and they gave us that as well. Additionally, there was announced buybacks, which really plays back or gives me reiteration that there is reinforcing belief of the growth story within Citigroup. And then beyond that, Jane Fraser has absolutely done a turnaround of Citigroup. I think that will continue. There is Andy Sieg and even David Poole, who I worked with when I was at Merrill to bring even the wealth management aspect. And so those are some key players. I know, working for 15 years in the retail space, that sometimes people can make really, really good platforms. So I think a combination of the turnaround and management really makes Citigroup positioned for a continuous rally.
All right. And look, we've already heard from all these names. As you noted, these big banks did so well during earnings season. Rick, your thoughts on the technicals, please.
In some ways, this is actually kind of a similar chart to our previous one we were looking at, which was Amazon here. And the reason I say that is we hit a yearly bottom right around the same time, right around that August 5th time, which was an important date for so many stocks. Then we formed a longer term upward sloping channel between our two lines. Same deal here. We found our trend line going across the lows, a duplicate line going across the highs, matched up pretty decently here. And like our last chart as well, we've seen some recent activity pushing to the upside, but overall, it's a stronger activity. We're up more off the low. We're breaking up higher above those our channel boundary here. We're pushing into these high levels just below the $82 mark. Moving averages, we've left far away at this point. RSI moving strongly into the overbought area. A reading above 78 at this point is pretty darn high. RSI only goes from a 0 to 100, so a reading above 80 or so would be really quite high indeed here if we were to keep moving in that direction. Now, if we include our other studies, well, we can see here that we are crossing above our +2 standard deviation channel today, that orange line that is 2 standard deviations above our blue linear regression line all the way down here. The +3 channel could be further resistance just above 86. 86.19 is where it comes in right now. To the downside, small volume node right here near about 79. Beyond that, the lower point where we had our after we had our gap up comes in around 75.86. We've also got our +1 standard deviation channel very close to that area, so around 75.50 to 76, another downside point to keep an eye on, Nicole.
Okay, thank you for all of that, Rick. Final thoughts here, Jessica, on this name.
Yeah, since I don't have this one in my longer term portfolio, I actually have a trade for this one. I'd like to utilize a cash secured put in order to add it to my longer term portfolio, going out about 38 days, which puts us at February 28th. I'm looking for a strike price that is closer to the money, so 80 would be my strike. Collect about $2.26. 226 altogether, which represents a 3% premium that I would receive. So neutral to bullish this trade is. If it moves adversely, I, of course, would own the security at the strike price. The risk is that ownership.
Yeah, and Morgan Stanley this morning puts a price target of 129 from 133. So they brought it down a bit, but they do maintain their overweight rating. And Citigroup yesterday, or the 17th, I should say, has a buy rating and a 120 target. Last but not least, so you used some of the metrics for PE. For example, Jessica, for Citigroup, it came same up for Seagate to find the value in some of these names. So tell us a little bit about STX today.
Absolutely. Seagate came up on the same exact screen. Now, I will note they are reporting their second quarter fiscal earnings after the close today. So important to note. So the way I would position this trade is you could wait after that, or I have a cash secured put that we can talk about in a moment. But Seagate's revenue is derived from data storage hardware. We know that that's something that's needed for that AI narrative. And specifically, their heat assisted magnetic recording advanced data storage technology is their newer product, if you will, but it allows more storage on the same amount of space, so more efficient from a physical perspective. This quarter, from the earnings side, I'm listening for this performance and reliability standards and qualifications from the major cloud providers, since there is this new heat assisted magnetic recording advanced data storage technology. It has to pass these qualifications. So I want to see where that's happening this quarter. And then going into that forward looking guidance that is ever so important, I want to see a ramp up in shipments, and I want to see how this will contribute to more meaningful revenue.
Okay. When we think about this, we'll take a look at the charts. Rick, some of your thoughts on the technicals.
Sure. And when we look at this one, there's a couple standout pieces of price activity here. First is that we had our old high point right here, and then the subsequent highs, even though they were a significant improvement over the previous best close and above those previous intraday highs, it didn't really last. We didn't really make any lasting traction beyond those old highs near about 113.57. Then we had a bit of a drop off here. We found some support at our low point there that we reached near about 95, once again in the recent decline there, but then it kind of fell apart once again. So we can see now, if you were to look here, it looks like an inverted head and shoulders type pattern. That's a more bullish pattern. The opposite is the head and shoulders, which is bearish. We did have a very sharp rally from that point that took us above all three of our moving averages in rapid succession and broke through either of the two, kind of major trend lines that you could have drawn. You could have drawn this blue one going across the highs. That was breached a few days ago. And this one starting with the high point after the gap down, connecting these subsequent highs. That is being breached today. So kind of no matter which way you slice it, it's more bullish activity. Once again, moving into that overbought area, we are above 72 on the RSI now, a really a big surge here as we head into this earnings event. Now, if we were to look into our next chart here, we can see our blue linear regression line comes in near that volume node, near about 103, and then we would be looking to fill, at least take a stab at filling the gap by breaking above that old high point near about 108. Then down here, quite a bit coming together near about 95, moving averages, -1 standard deviation channel, and volume node, Nicole.
Okay, thank you for all of that. So you make the good point about the earnings. We have the big picture on the trade ideas. Let's get into that a bit. Jessica, final thoughts here.
Sure. The trade on this one, very similar to the other trade structure. The way I like to add longer term positions to my portfolio via the cash secured put, again, going about 38 days out, puts me at February 28th. Closer to the money strike price at 99. That yields me about 3.5%, so $355 altogether. Again, the risk is the full stock ownership at the exercise price.
Thank you both so much. Jessica Inskip, Rick Ducat, thank you for the big three today. We looked at Amazon, Citi, and also Seagate. Thanks for the big three, Jessica and Rick.